Good evening to you all accounting buffins and welcome to our accounting show on a lovely Thursday. I'm sure you've been waiting for this show, Matriculants. My name is Abram and of course we've got Ashraf in the building. It's the A Squared team in the building. Ashraf, how are you?
Good, Abby. You're looking very cheered up today. You ready to go for the show?
You made a promise to me before the show that it's going to be an exciting show.
That's
so
right. That's right. Great stuff, Abby.
Exciting stuff. What are we doing?
Today we're looking at adjustments. This particular topic, grade 12s, remember, once you know your adjustments, it sorts you out for both your income statement and your balance sheet. And you're going to find today's show very, very interesting and exciting because we're doing something totally different.
That's fine.
Wait for it.
All right, I can't wait because you've said a lot before the show. Guys, I really have to promise you it's going to be a great show. But for you to enjoy, you need to get the notes. Download them on our website, which is learn.mindset.co.za. Or if you want to find out more and the shortest and the quickest way of getting them, go to our Facebook page, which is facebook.com/LearnExtra, XTRA. Or also follow us on Twitter @LearnExtra. Send me your tweets, your questions, and your comments about the show, and I'll read some of your comments as the show goes on. But remember, we've got a workbook that you can order for yourself. It's only 139 Rand. So all you need to do is to send an email to sales@mindset.co.za, or else just ask me and I'll tell you more about it on Facebook. Over to you, Ashraf.
Thanks, Abby. Grade 12s, we want you to listen attentively. We want you to pay attention. We want Learn Extra wants to make sure that you get an A in accounting. And definitely that is possible if you put your mind to it. Here goes. Let's start with the first adjustment. Watch what we're doing now. We're telling you that in this particular question here, right, it tells you that goods are sold at a markup of 60% on cost, on the cost price, right? The company held discounted cash sales during the year to clear excess stock. The total of the trade discount given to customers was 702,000. Notice that your sales is your unknown figure. Obviously, you have to calculate your sales. What is given to you? Watch this. Your cost of sales is given to you as 8,200,000. Right, that's your cost of sales. Okay, now, what are we going to do with that cost of sales? Obviously, they're telling you that the firm uses a markup of 60% on cost. Immediately, I tell myself, fine, cost price, markup, and my selling. My cost is 100. Cost, when you're marking up on cost is 100%. Right, my markup is 60%, therefore giving me a selling of 160%. Always use this here, right? Now, in this particular instance, you are given the cost price in terms of rands, 8,200,000 Rand. You have to go and calculate the selling price immediately. Very simple. Onto your calculator, and you say 8,200,000, 8,200,000, 1, 2, 3, times 60% is equal to 4,920,000 plus your 8,200,000, 1, 2, 3 will give you a figure of 13,120,000. Now, what is that? Your 13,120,000 Rand is your sales figure. Understand that you used your cost of sales to calculate your sales of 13,120,000. Okay, watch this now. When I go into my sales figure, right, I start off by saying, open my bracket, 13,120,000 is my sales figure. But something else happened. What happened? Watch here. They're telling you that during the year, there was a sale where you wanted to clear excess stock, and you gave a trade discount given to customers. What do we mean by a trade discount? A trade discount tells you that this discount is given at the point of sale. In other words, trade discount is never ever recorded. Watch what I'm saying. It has no impact on my discount allowed. Remember, discount allowed is given to my debtor on the settlement of an account. But a trade discount is given at the point of sale. And therefore, grade 12s, watch, the 702,000 is going to impact on my sales figure. Therefore, when I look at my sales figure, I say minus 702,000. And therefore, what do we have? 13,120,000 minus 702,123 to give me a figure of 12,418,000. Watch, 12,418,000. What can you clearly see? The adjustment is done and dusted. Why? In your income statement, watch the allocation of marks. There's a calculation figure for you. There's the trade discount that you calculated, and there is your method mark, and there you've got 4 marks. So what are we showing you? In this particular show today, we're emphasizing the adjustment and its impact on the income statement. So clearly you can see, when I work in an income statement, this is what is expected of me. AB, did I tell you it's an exciting show?
Yes, you did.
Right. So guys, this is what it's all about. Always ask yourself, how am I going to present the information in my income statement? That is what it looks like. Got it? Adjustment, done and dusted. Okay, next adjustment. What are we told? We are told, remember, okay, AB, here's your opportunity. Go for it.
Read the full question.
Exactly. Read the full question.
Yeah.
We won't use an expletive, and we won't say what people normally say when they're angry,
No, we
right?
just stick to ours.
We just stick to the full question. Okay. Because if you don't read the full question, you then become the fool. Isn't it? Because that's when you make the mistake. Okay, now watch this here. Packing materials to the value of 41,000 rand was used during the year, for the year ended, or for that particular financial year. Notice the difference. What's the difference? Instead of them telling you packing material was left over, they are telling you that packing material was used to the value of 41,000 rand. Immediately guys, in your packing materials, watch here, in your packing materials, your answer is 41,000 rand. Why? Because that is the amount or the value of packing materials that we have utilized. Got that? Now notice, what I've done for you is I've given you another example of packing materials. Let's watch this one here. A physical stock take on the 30th of June 2014 reflected the stock of packing materials on hand as 7,800. What I've done for you here is I've shown you the 2 ways in which the packing materials can be examined. One is they tell you what you used, and in the other one, they're telling you what you have left over. Watch this one here now. What are we going to do in this one here? In this particular one, very simple. We bought packing materials to the value of 57,800. There's my 57,800 in terms of what I've purchased. Remember, what do I have left over? 7,800. What is my double entry? A debit to consumable stores on hand, which is a balance sheet item. Where does it appear in my balance sheet? Under inventories. Why? It was as per physical stock count. It's a stock, it's a verifiable item. Right. If I'm debiting consumable stores on hand, I credit my packing materials. Watch here. And by crediting my packing materials, how do I present this in my income statement? Very simple, guys. Watch. You take your amount of 57,800, which is the given figure in your trial balance, right? There's your 57,800. Now watch this. Watch this. We want you to make sure that you get the spot on in the exams. You are crediting packing materials. Here, the contra entry is a debit to consumable stores on hand, a credit to packing materials. In other words, what are you doing to your packing materials? You are decreasing it. You are crediting it with 7,800. And therefore, minus 7,800, and this will obviously give you a figure of 50,000 rand. Clearly you can see, look at the difference between the two adjustments. In the one you are told what you actually used, right? And in the second one you are told the value of packing materials left over. Got that? Brilliant. Let's move on. In terms of my salaries and wages, what am I told? I'm told that one employee was omitted, was left out from the salaries journal for June 2014. His salary details are as follows. There's the information pertaining to whom? To the employee that was left out. Immediately, watch the information. What am I given? I'm given the net salary of 4980 plus the deductions of 2020. What do I want? What figure do I need? I need the gross salary. That's right. And where do I get the gross salary from? I get it from my information. It's my net salary plus my deductions. Watch. 4980 plus 2020 will give me a figure of 7,000 rand. Immediately I go into my explanation. Watch. Salaries and wages. Open up your salaries and wages. Take the amount that appears in your trial balance. What was it? 788,000. Immediately I say 788,000 given to me in my trial balance. And what's my double entry now? He was omitted. So my entry would be a debit to salaries of how much? 7,000 rand. So immediately we add 7,000 to that figure. Right. I'm debiting salaries. Why? Because salaries is an expense. What do I credit? And this is important for balance sheet purposes. What do I credit? I credit creditors for salaries, which is trade and other payable. I credit my pension fund. I credit my medical aid fund. I credit SARS income tax and all my other liabilities in respect of salaries and wages. Therefore, grade 12s, I can see that 788 plus my 7,000 plus 788, 1, 2, 3, will give me my figure of 795,000, which is the final figure that I need in my income statement in respect to salaries and wages. But that's not the only entry. Why not? Let's go back and see. Let's look at the information that we have on hand. I'm also told that we have employers' contribution to the pension and UIF of 8,100. And in my given information, watch here, I'm told employer's contribution 1610. What's the entry for my employer's contribution? A debit to employer's contribution. Why? It's a perk, it's an expense to the business. Therefore, debit employer's contribution, credit what? Obviously, what were you contributing for? For the pension fund and the medical aid fund. Watch for balance sheet purposes. You have another entry in your balance sheet under your current liabilities for your pension fund and your medical aid fund. Therefore, let's take the 1610 now and show that entry. Obviously, you start off your employer's contribution with the figure given in your trial balance, which was 8,100. Okay, there's my 8,100 plus. What did I contribute? Let's find that figure. 1610. 1610. Close. Let's get our calculators. 8,100 plus 1610 is equal to 9710. Clearly you can see, what have you done? You've brought into perspective two things. One, you've adjusted the salaries and wages amount, bringing it up to the correct amount, and you've brought up the employer's contribution where you've effected the adjustment in your income statement. Important, guys. Very important. This is the layout. This is the presentation that you're going to show in your income statement. Can you see what we've said? We're not doing the income statement per se. We are showing you how adjustments are handled, how we go about the double entries, and how they impact on the income statement. That's what we want to see in the exams. Watch one more thing. I've shown calculations all along the way. Why? On your exam paper, it clearly states part marks will be given for information that appears as workings. This constitutes part of your workings. Guys, stay with us. We have more adjustments. We're going to make sure that you understand this by the end of the show. AB, back to you.
Of course, guys, be spot on right now by liking our Facebook page, which is Mindset Learn Extra. Also refer your friends, guys, because we love learning together. Whether it's your teacher at school, tell them to like our Facebook page as well, and let's help one another. We'll see you after this break. Now, who wouldn't love to stay at such a beautiful place, South Point Accommodation? Well, if you are a matriculant who's watching right now and thinking next year you need to be getting a place for yourself where you're going to be studying, or next to where you're going to be studying, all you need to do is to simply fill in the entry form that we have for you guys. Those accommodations are just the best. The security, the food place, and you can share or live in a single room. I don't know, Ashraf, just out of interest, would you love to share a room or just have a single room?
I would prefer to stay on my own because each one has their own styles. You know what I'm saying?
I wouldn't mind sharing with you. Hey?
Is it? Oh, no problem. I'm a difficult guy to share with.
It's okay. Well, guys, enter for that competition. Otherwise, if you're watching the show right now and you're having some questions, we know that exams are around the corner and you don't have to panic, because when Ashraf is around, no one needs to fear, guys. So send through your questions on our Facebook page, which is Mindset Learn Extra, or simply go straight on here to facebook.com/Learn Extra, or on Twitter at Learn Extra. Over to you, Ashraf.
Thanks, AB. Welcome back, guys. I hope you had a nice break, and we're taking you further into adjustments. Now, this one here, you hear very often, you hear matriculants saying, what do they mean when they say interest is capitalized? How do we determine it? Well, this is how you do it, guys. Very simple. Take your information that you have and watch. Step number one, always follow a set pattern when you are working. It gives you direction. You know exactly, this is what I need to do when I'm calculating my interest that is being capitalized. Step number one, balance at the beginning of the year, liability 1,470,000. Okay, that's your balance at the beginning of the year. Step number two, so we've dealt with that information. Step number two, repayments during the year amounted to 840,000. Obviously, when you repaid your loan, what was your double entry? Always go back to the roots. A credit to bank, start with the known, your moolah is decreasing. A credit to bank, a debit to your loan account. Watch, 840,000 is the bank figure. Watch, I'm not putting in any details here. I'm showing you a calculation that you have to work out in order to work out your interest that is capitalized. Step number three. So that one is done and dusted. Let's look at step number three. What do we have here? 750,000. What is the 750,000? That is your balance at the end of your financial year. Once again, if that is my balance at the end of the financial year, I put it in 750,000. Why on the debit side? Because obviously it's above the line, and when you bring it down, it's going to be on the credit side. Okay, what have we done so far? We've got the opening balance, which we sorted. We've got the bank figure, and we got the closing balance. What do we now do? Very simple. Watch. Take out your calculator and say 840,000 plus 751,223 is equal to that, minus, what did we pay? 1,470,000. 1,470,123 to give me a figure, missing figure of 120,000 rand. Okay, now, what is this 120,000 rand? Grade 12s, come on. you should be screaming out the answer as you are sitting and watching us here. Why? The 120,000 rand is the interest that you have capitalized. When we say interest is capitalized, what are we saying? We are saying that the interest is added back to the loan. In what way? Watch this here. What's my contra entry when I received my loan statement? I'm debiting interest on loan, debiting it with 120,000 rand. Why am I debiting it? It's an expense. Interest is an expense, therefore debited and a credit to my loan account. So obviously, when I'm doing my income statement, right, I've got interest expense, open my bracket, 120,000 rand. Obviously, I'd look for other interest as well. Like what? Interest on bank overdraft would be added to this here. Coming back to my interest, and the interesting part that I want you to see here is the following. I have paid the bank a total of 840,000, okay? Of the 840,000, 120,000 rand was the interest. Are we in agreement? Obviously, we calculated it. Now, take that figure of 840,000, 1, 2, 3, minus the 120,000 rand, okay? And it gives you a figure of 720,000 rand. What was the 720,000 rand, grade 12s? The 720,000 rand that we calculated here was our capital repayment. It means there was a capital repayment of 720,000 rand. It means my loan decreased by 720,000 rand. And if the question requires you to do the balance sheet and you are asked to show the separation of the loan into two components, in other words, what are we referring to? We are saying that in your loan account, if you are expected to show the loan in terms of the non-current liability and the current liability, and if they told you the repayment stayed the same, then obviously this current liability figure would be 720,000 rand, because that's the amount that you're repaying in the next financial year. Got that? Okay, now, let's check something, just for interest's sake. Let's do this here. And I want to prove to you the different methods you can employ to make sure your workings are correct. Let's take the 1,470,000, which was beginning of the year, 1,470, 1, 2, 3, minus your closing balance of 750, 1, 2, 3, and watch, voila. What figure do you get? 720,000 rand. The difference between what? Your opening balance and your closing balance, indicating to you that you have paid off your loan an amount of 720,000 rand. I hope that is crystal clear to you. Got that? Okie dokes, let's move on. This adjustment here always causes problems for learners. Maybe? They just go
It's a
into
nightmare.
panic mode, right? When they see something like this. But like we say, don't
fear.
fear, because we're going to show you how to get there, right? What are we going to do? 1, rent income for July 2014 has already been received, okay? So, included in this figure of 69,160 is the rent for July. Now, if nothing else was told to you, that means you receive rental for 13 months, then voila, no problem. What do? Take the 69,160, divide by 13, get the 1 month, and make your entry. But that is not what happened. Why? The monthly rental was increased by 10% on the 1st of May 2013. Obviously, things have changed. It hasn't been all equal for the entire period. No, there has been an increase, a percentage increase in the value of my rental. Do I know the monetary amount? No, I don't. What do I know? I know for the fact that the total rental that we have received is 69,160. Right, okay. Now, if we count, my financial year started, obviously, if it ended in June, right? So it started in July. So it's July, August, September, October, November, December, January, February, March, April, May. That gives me how many months? Let's count. Starting, let's do it so you can see what I'm talking about. If your financial year started, let's just get the dates right so we know what we are doing. Rent income for July, so it ended in June of that financial year. So you've received the rental for July. Right. When did the rent increase? The rent increased by 10% on the 1st of May. So that's May, June, and July is included. Why? Because I've received the rental for July as well. So you can clearly see that that year accounts for 3 months. Okay? So, going back, if we look at the financial year, our financial year is 12 months. Am I right? This would then give you 10 months of the old rental. In other words, from the previous year's July until April would give you 10 months. So, this is what we do. Watch this carefully. We say 10 months at, we don't know the monetary value, we know the percentage. At 100% old rental will give me a figure of 1,000%, whatever I'm calculating. So it's 10 months of the old rental at 100% will give me 1,000%. That's the old rental. Was there an increase in the rental? Yes. From when? From May. So May, June, and July. 3 months, watch, 3 months times your new rental. What was your new rental? Your rental increased by, let's check. The rental increased by 10% on the 1st of May, right? Therefore, we say 3 times 110, which will give me 330. Clear? Follow the steps, guys. Going back, because of the importance of this adjustment. Number 1, take your old rental to be 100, which is given to you. Number of months, total. New rental, 3 months, 110, 330 if you multiply. Add. 1,330 is the total rental in terms of percentages. That's the operative word, in terms of percentages. Okay, now, if that is my figure, 1,330, which will be equal to what? What was the monetary value? 69,160. 69,160. Can you see the equation that I'm drawing up? I'm saying that my percentage rental for the 13 months amounted to 1,330, which is equal to my rand value of 69,160. What do I want to know? What figure am I looking for? I'm looking for the 1 month rental, which is what percent? 110%. Why? It's this 1 year. It's the July rental included in there that I need to calculate. 110 is equal to my unknown, right? So immediately what do I say? Calculator, 69,160 times 110, I'm cross multiplying, divided by 1,330, and my figure is 5,720. Watch, 5,720. What is the 5,720? The 5,720 is the amount of rental that I have received in advance. Income received in advance, also known as deferred income. Double entry. Debit my rent income, credit income received in advance. Watch this here. Immediately I open my rent income and I say, fine, 69,160 minus 5,720. Can you see the double entry? A debit to rent income. Why am I debiting rent income? To reduce the rent income. I've received rent income in advance. Therefore, a credit to my income received in advance. Remember, the 5,720 will go to your balance sheet as what? It will go to your balance sheet under trade and other payables. What item? Income received in advance. Immediately, I say 69,160 minus 5,720, and my answer is 63,440. there goes. This is what you're going to show in your income statement. Got that? Once again, let's just recap this particular aspect of rental. Separate old from new in terms of percentages. Old, new, drop an equation, solve, cross multiply, and there's my answer. The 1 month new rental amounted to 5720. Right, that's the one method or one type of question that could appear in your exam. Now, let's look at another one. In this particular instance, you are told that the rent increased by 1,320 Rand on the 1st of April 2011. The tenant has paid the rental until the end of July 2013. Right. What are we going to do here? I think we got our dates mixed up here. Probably just a typo. This should have been 2013. Let's just change that so we get our dates right. Dates are very important. This is just a typo, guys. Let's just ignore that. So if the rent increased by, on the 1st of April 2013, the tenant has paid rent until the end of July 2013. Once again, financial year ends in June. Okay, so if my year ended in June, once again, watch what I'm going to do. Step number 1, remove the increase. Why? Because you want to make all the months equal. So, it increased by 1,320, right? And the increase took place on the 1st of April. And AB, that was certainly no April Fool, because maybe the 2011 was an April Fool. So we can blame it on the April Fool,
Yes,
right?
of course.
It's supposed to be 2013. Okay, so on the 1st of April, the rent was increased by how much? 1,320. So that's April, May, June, and July. 4 months. So what do I say? 1,320 times 4 is equal to, calculate, 1,320 times 4 is equal to 5,280. Okay, what do I do now? 5,280 is the increase. 5,280 is the increase amount. Okay, so immediately I know, start with the given figure. Our figure is 176,880. That's the given figure for rent income. Step number 2, I've calculated my increase to be what? 1,320 times 4. I'm removing the increase of 5,280. There's the 5,280. Watch. So we say 176,880 minus 5,280 to give me a figure of 171,600. What have I done here, grade 12s? I've now made all the months equal, removing the increase. Right, 171,600, divide this now by 13 months. Why 13 months? Because the financial year end was June, and I received my rental for July. So 171,600, let's go back, we've got it there, divided by 13 is equal to 13,200. Okay, now, what is the 13,200? The 13,200 is my rental prior to the increase. Got that? It is my rental income prior to the increase per month. Okay, what was the increase? Remember, the increase was 1,320. Okay, so therefore, plus 1,320, I'm adding the increase back into the old rental to give me a figure of 14,520. Right, now what is this 14,520? This answer that we got here of 14,520 is what? That is the rental with the increase for the 1 month that I'm working for the month of July. Clear? So let's recap. Step number 1. Take your increase amount, multiply it for the number of months that it has increased to get the total increase. Once you've determined the total increase, subtract it from there. Why? To level it, to make them all equal. I've made them all equal, and it gave me a figure of 13,200 per month. What do I now do? I now add back the increase that I originally had, that I calculated, that was given to me, 1320, to give me a figure of 14,520. There's my rent income. Remember, the figure is 176880. 176880 minus. Why minus? Double entry. Debit rent income. Credit income received in advance. When you are crediting your liability, right? You are debiting an income, thereby reducing it by how much? 14,520 to give me my figure of let's go back. 176880 minus 14,520, and the answer is, there's something wrong there, let's go back. 176880 minus 14,520 to give me a figure of 162360. 162360. That's the figure that I want in my income statement. Okay, guys, we worked very hard. Let's take a break. Avi, over to you.
I think we deserve it. And a big shout out to everyone that is watching, particularly I've got a shout out from, okay, I'll get it. Okay, from Carol Radzilani saying, oh my God, you're making me enjoy accounting more than ever. Yeah, thank you so much, Carol, and everybody that is tuned in. If you still have some questions, we're here to help you guys. On the last segment that we're going to have, it's all going to be about you and your questions as well. We'll see you. Welcome back, guys. If you think you're a Bright Spark, enter the Be a Bright Spark competition and you could win yourself that cool Chevy Spark L. The competition is closing on the 3rd of July and the winner will be announced live right here on Len Extra Live on the 21st of July. So guys, get entering right now. More details are on facebook.com/Len Extra. I've got some questions and comments from you.
Go for it, AB.
All right. Okay. You know, I had to emphasize these dates are very important, guys. That's what director kept on reminding me. Mzwakin Kosi says, Mr. Ashraf, I'm worried about the spaces. I'm referring to when we must show the calculations in the brackets. There's limited space normally.
Yes. No. Good point, guys. Please make sure that when you're writing your figures, don't write too big. Don't write large figures. I'm sure the examiners will be able to read, but try and show your calculations in your brackets. It's compulsory, guys. You can't do without that.
Okay. A lot of people seem to be confused on this one. Dogozo Ngumara says, how did you get the 7,000 in the salaries and wages?
Okay, fine. I'll explain it to you. Watch. How did I get the 7,000? I'll explain it to you. Here goes. Here, I think it's in this one here. Let's just check. There's it. Watch, guys. You have a net salary of, let's bring that back. Let's undo that. Okay, here goes. We have a net salary of 4980. Okay, so you have 4980 as your net salary. Okay, what did you add to it? You had deductions to the value of 2020 plus 2020. There's your 7,000. So you add, what do you add? You add your net salary plus your deductions to give you your gross salary. Remember, I'm not adding this one here. That's my employer's contribution. That's a separate double entry. It has absolutely nothing to do with the salary adjustment. This one, these two components would give you your gross salary.
Awesome. Otherwise, we've got great comments, such as this one from Nessilimo saying, really enjoying the show. Onesimo Tabani, I'm enjoying the show. Just hope I'll be able to do it on my own. Big ups to Ash. Mr. Ash. Douglas says, I love this teacher. He makes it seem so easy. That's how accounting should be.
That's what it's all about. We want to make it easy for you to understand. So when you're working on your own, follow the procedure that we follow. Important.
Of course. On that note, guys, I'm just so excited. We've just reached 8,000 followers on Twitter. So thank you guys, each and every one of you, for your tweets and for following us. If you haven't followed us, follow us at Len Extra, XTRA. Yes,
Okay,
back
Docs.
to you.
Right, back to the adjustments.
Yes.
Thank you, AB. You're a slave driver, eh? Okay, let's go. Here go, guys. We're busy with this adjustment here. No entries have been made for stock that has been stolen. At the beginning of June 2013, the insurance company has informed Salati Limited that they have transferred 32,000 Rand into the business bank account in respect of an insurance claim. Salati Limited bears 20% of stock losses. Right, we've got information. We've got to use that information to determine what has happened. Number one, we are receiving 32,000 from the insurance company, and obviously, we are bearing 20% of stock losses. This means that 32,000 is equal to 80%. Make sense? Of the total claim of 100%, the insurance company paid us 32,000 Rand. We are bearing 20% of that cost, as probably we were underinsured or whatever the reason may have been. But in other words, what am I trying to get across to you is that the 32,000 Rand is equal to the 80% that the insurance company has paid us. Okay, therefore, this means that the 20% will be equal to my unknown. Let's calculate that. And immediately we say 32,000 times 20 divided by 80 is equal to an amount of 8,000 Rand. Right, what is the 8,000 Rand? The 8,000 Rand refers to our loss. So immediately you identify an expense. What's the expense? Stock deficit due to theft, or loss due to theft. How much have we lost? 8,000 Rand. And immediately you identify this. Where? In your income statement, you have an item called loss due to stock theft, an amount of 8,000 Rand. Okay, so understand this. Understand this. And I need to illustrate this by means of T accounts for you as well. So what I'm going to do is watch. We are losing trading stock to the value of 40,000 Rand. Understand that. Okay? So it's a credit to trading stock. What do I debit? Where are my expenses? One, I go into my insurance claim account and I debit it with 32,000 Rand. And I debit my loss due to theft, 8,000 Rand. So this, grade 12s, is the entry that you recorded. Watch. You debit insurance claim with 32,000 Rand. It's a debtor. The insurance company owes you the money. And you debit your loss due to theft with 8,000 Rand. That's the amount we show in our income statement. Now, to give you clarity on this insurance claim, in our example, the insurance company transferred the money into the bank account. And therefore, the entry would be what? We're receiving money, a debit to bank, and a credit to insurance claim of 32,000 Rand, thereby settling the amount that the insurance company owes us. Keep that in mind. However, if this transaction did not take place, let's assume that we did not receive the money from the insurance company, then what do you do with this insurance claim? Very important. It appears in my balance sheet. Where in my balance sheet? It appears under trade and other receivables, indicating to you that you have a debtor who owes you an amount of 32,000 Rand, a special debtor, obviously not a trade debtor, but the insurance company. I hope that is crystal clear to you. In terms of income statement reporting, our loss is what we have, an amount of 8,000 Rand. Clear? Good. Done and dusted. Let's move on. It says here, an amount of 1,700 Rand, this one, received from M. Puani, who had been credited to the debtor's control account in June 2013. The account of our debtor was written off as bad during May 2013. Now watch the information once again. And very often, candidates don't see the entry, and as a result, make a mess of the transaction. Watch what has happened here. 1. Here's your debtors control account. And your debtors has a balance of 521,300, which is given to you. Right? There's your given balance. You're starting it on the debit side of your debtors control account. Okay. Let's look at the adjustment once again. The debtor had been written off as irrecoverable, as a bad debt in the previous month. Somehow, the debtor decided to become honest and pay us, AV, subsequent to what we wrote off the debtor. Now what happens? When we received the money, obviously we debited bank, but we credited the debtor's control account in error. Why? Because once a debtor is written off as irrecoverable, then there's no way that when the debtor subsequently pays you, that transaction gets recorded in the debtor's control. No. When we recover a bad debt, my double entry is what? A debit to bank, we're receiving money, and a credit to bad debts recovered. Okay, so clearly you can see the error. We recorded this amount in the debtor's control account in error on the credit side. So obviously, to correct it, what will you do? Very simple. You're going to debit your debtor's control with an amount of 1,700. So there's your 1,700 on the debit side, a debit to debtor's control, and a credit to what? What account should have been credited in the first place? Bad debts recovered, an amount of 1,700. Clearly you can see, look at my adjustment, a debit to bad debts and a credit to my bad debts recovered. Now, income statement purposes, bad debts recovered is an income, and therefore, in your bad debts recovered, you have an amount of 1,700. Can you see? You reflect it as an income under the income section of your income statement. Bad debts recovered, 1,700. Okay, then we went further, and we were told that the provision for bad debts must be adjusted to 4% of outstanding debtors. Right. Now, step number 1, identify what type of an account is provision for bad debts. Provision for bad debts is what we call a negative asset. It is not a liability. It is a negative asset. Why? It reduces the value of your debtors. Remember, you are being prudent in your approach. What are you doing? You're anticipating a loss. Therefore, you're reducing your debtors by a certain provision. So you are stating the figure more in terms of what is real, what you actually expect to receive. Therefore, provision for bad debts is what we call a negative asset. It reduces the value of your asset. Okay, coming back to my debtors control. I have a figure of 521,300 plus 1,700, which will give me a total of 523,000. Watch, this entry impacted on my figure of my debtors control as a result of the error that had been made. Therefore, I now calculate 4% times 4% is equal to, let's do that again. It was 521,300 plus 1,700 is equal to 523,000 times 4, 20,920. That's your provision figure. Okay. We do not have a provision figure. Let's see, we may have it here at the top. Oh, we've got one. There's it. 22,000 is the existing provision for bad debts. 22,000. Okay, what do we need? We need 20,920. Watch this. Very, very, very important. Very, very, very important. Here's my provision for bad debts. And the amount for provision for bad debts, we said, was 22,000. Therefore, put in the figure of 22,000. That was the opening balance for provision for bad debts. Got that? Okay, now, this is, guys, the simplest way of looking at provision for bad debts. Watch. What do I now need in my provision for bad debts? I need an amount of 20,920. 20,920. What question do you ask yourself? Watch this here. You've got an existing provision of 22,000. You only need a provision of 20,920. Clear? Obviously, the obvious question that you ask yourself, what's happening to your provision? What do you need to do to your provision? Do I need to increase it? Certainly not. It needs to be decreased from what? From 22,000 to 20,920. Therefore, take your 22,000 minus 20,920. Oh, what am I doing there? 20,920, and your answer is 1080. Watch this carefully. I need to decrease my provision for bad debts. Therefore, it's a negative asset. To decrease it, what do I do to it? I debit it with 1080. Let's just check if that figure is right. There we have it. So, by debiting my provision for bad debts, I have to credit an account called Provision for Bad Debts Adjustment with 1080. Now watch. When the provision for bad debts adjustment is credited, it indicates to you that this account is now an income account. Why? Very simple. Here's your answer. Look at your provision for bad debts account. You decreased your provision. You had too much in your provision account. As a result, you debited provision for bad debts and credited your adjustment account, and as a result of that, you now have an income in your income statement. Okay, please make sure that you understand this here.
Yes.
Is there a question, maybe?
Yes, there is one. There's a tweet from @Ramari_Dagalo. On accounting that is live now, why didn't you say 1,320 multiplied by 4 over 12 when calculating the rent income?
No, that one is simple. They just told you, let's go back to that one. The rent increased by 1,320 per month. It's got nothing to do with a year. You need to establish for how many months did your rent increase. It increased on the 1st of April. So it was April, May, June, and because you received July as well, that's why the 4 came. You're not calculating another calculation. All that you want to establish is for how many months did your rent increase? It increased for 4 months. At what amount? At 1,320. Therefore, you just multiply the increase by the number of months, and that will give you your total increase.
All right. It's been a great show. I'm hoping we can also help this guy, but we don't have time. Mr. Rafa didn't understand that method for calculating rent using months and percentages. That is Nkateko Messi.
Okay, we'll come back to you, but remember once again, whenever you're calculating percentages, the secret, we have very little time, but I'll summarize it for you very quickly. Number of old months at 100%, number of new months at the increase. Why 110? Because the rent increased by 10%. Therefore, old plus new, 110. Just follow that method. Go back, and I'm sure they can view the show again.
Of course.
Absolutely.
All right.
Go check it out.
Less than 10 seconds.
Guys, everything of the best.
Thank you so much, guys, for watching, and thank you to the Department of Basic Education for making this show possible. We love you. Peace.
Cheers.